Ladies and gentlemen, good day and welcome to the conference call of MPS Limited on the recent acquisition of Research Square AJE LLC, along with its subsidiary, American Journal Online, Beijing Information Consulting Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Arora, Chairman and CEO. Thank you, and over to you, sir.
Thank you, Sagar. Good afternoon from our corporate office in Noida. A very warm welcome to our announcement call on the recent acquisition of AJE. On the call, I have with me Sunit Malhotra, who is our CFO, and Pratna Agarwal, who is our Deputy CFO, and they join me from our corporate office here in Noida. Today, Sunit will kick things off in our opening segment by describing the acquisition, followed by Pratna, who will describe the acquired business. I will then close the opening remarks with our strategic rationale behind acquiring AJE and also describe the road that lies ahead. We will then open the call for questions to which the three of us will respond. Over to you, Sunit.
Thanks, Rahul. On 29 February 2024, MPS North America LLC, a wholly owned subsidiary of MPS Limited, via Special Purpose Vehicle American Journal Experts LLC, incorporated with effect from 20th February 2024 in the state of Delaware, USA, acquired 100% stake in Research Square AJE LLC, North Carolina, USA, along with its subsidiary, American Journal Online Beijing Information Consulting Limited, Beijing, China, AI tool Curie, and Research Quality Evaluation, RQE, from Springer Science Plus Business Media LLC, a subsidiary of Springer Nature Group. The cash consideration of $8.4 million was paid as per the terms of the membership interest purchase agreement and other transaction documents. The acquisition of the target entity did not fall within the related party transactions. None of the promoter group or group companies have any interest in the acquired business. Over to you, Pratna, to describe the business.
Thanks, Sunit. AJE is an author solutions company headquartered in Durham, North Carolina, USA, which also has a 100% subsidiary headquartered in Beijing, China, which was established in 2019 called AJO. AJE is a B2C dominated business with excellent gross margins. AJE's strong gross margins are driven by a focus on automation and applying ML AI in the editing process. AJE has a dedicated AI team with the opportunity to enter the AI NLP market, which is expected to grow to $112 billion in 2030 at a CAGR of 25%. AJE delivers a wide range of digital language editing services under the brand American Journal Experts, AJE, and Springer Nature Author Services, SNAS. The services comprise language editing, academic translations in several languages, scientific editing, formatting services, and custom illustrations. Under MPS ownership, AJE and AJO will continue to be the supplier of SNAS, and we have signed a 5-year exclusive commercial relationship with Springer Nature. The transaction perimeter composes of 2 legal entities, one registered in the US and another registered in China, and additional 2 products. Curie is an AI-based proprietary language SaaS platform. Curie provides intelligent suggestions, improves writing structures, enhances flow, and assists in citations, thus facilitating the creation of high-quality academic content. Research quality evaluation services engage qualified reviewers to expedite the peer review process with its team of active researchers with terminal degrees like PhD, MD, doctorate, etc. Over to you, Rahul, to describe the strategic rationale and the roads that lie ahead. Thanks.
Thanks, Pratna. The acquisition of AJE drives us toward Vision 2027 in a meaningful way, and the scale-up will profoundly impact both our content business as well as our platform business. Additionally, current and future AJE customers will see significant benefits from our long-term strategy of embracing technology and leveraging efficiency to drive value and quality for our customers. The acquisition brings several strategic advantages. First, the integration of Curie into our portfolio further enhances our AI-driven capabilities, aligning with our commitment to constant innovations through MPS Labs. Second, a definitive entry into the B2C market broadens our reach, a strategic move that is expected to have a meaningfully positive impact on our scaling agenda. Third, expansion into China further diversifies our business and aligns with our agenda to strengthen our global presence. Fourth, the acquisition of AJE advances us upstream in the value chain, bringing us closer to the authors. We now stand as the only global player with end-to-end capabilities to service academic publishing from author to researcher. Finally, through the acquisition process, Springer Nature and MPS have committed to realizing the tremendous value that will be created by advancing our strategic partnership. In summary, the acquisition of AJE aligns with our growth strategy called Supercharging Gestalt, focused on a market-based approach, premier customer partnerships, expansion into new markets, investment in new capabilities such as AI, and the acquisition of growing assets. We have acquired a modified form of the business that is smaller though profitable. We expect to enter FY25 with a business that is moderately profitable compared to our core business and exit FY25 with a business that is as profitable as our core business. We'd like to now open the call to questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. If you have a follow-up question, you can rejoin the queue. The first question is from the line of Naveen Bothra, who's an individual investor. Please go ahead.
Naveen Bothra from Delhi. First of all, congratulations, Rahulji and team MPS for the excellent acquisition. I have a couple of queries. First of all, I would like to understand what synergistic benefits and size of opportunity we see from this combined existing AI capabilities in MPS Lab and AI capabilities added due to AJE acquisition. If you can help us understand about the synergistic benefits of both MPS Labs and AJE AI capabilities. And second one is regarding the very good attractive price we have acquired this company of turnover of around 250 crores in Indian rupees with the 70 crore rupee cash upfront payment. So if you can help us understand what were the rationale for the sellers and all these things for this very good price which we can acquire, because 250 crore revenue, we don't have any numbers for FY3 as such, but if we assume that the 250 crore is the run rate, 250 crore is the run rate, and with the EBITDA margin of 13-14% currently, which as you said will move to our own EBITDA levels of around 28-30%. So if you can help us understand the rationale behind this attractive acquisition, which as shareholders is quite good to us, but will help us in understanding the whole acquisition theme, sir. Thank you.
Thank you so much for your warm wishes and excellent questions. I'll start with the synergy piece. So on the revenue side, as I pointed out, AJE is almost entirely B2C. So one aspect that we see is being able to market and sell AJE capabilities to MPS's customers, which are B2B in nature. Because Springer Nature is a publisher, AJE was unable to sell their services to Springer Nature's competitors. Historically, AJE did have B2B customers. In this space, what we've seen is B2C tends to be on average 70% of the revenue. B2B seems to be around 30% of the revenue in an ideal scenario. And the entire B2B piece is missing today for AJE because they were owned by a publisher and therefore not able to market those services to other publishers who are competitors of Springer Nature. We saw similar situation when we had acquired MPS when they were owned by Macmillan, and very quickly after the ADI group acquired MPS, we were able to go after more publishers. So that is one revenue synergy that we see from an MPS customer base standpoint. From an AJE customer standpoint, as you know, we have several products and technology that we market to our B2B customers that we currently are not selling to B2C customers. So it also gives us an opportunity to market our technology solutions, specifically our Highwire suite of platforms, to the author sides of the B2C side. So there's going to be immediate revenue synergy. Of course, there's also going to be cost synergy that will be realized, which will primarily drive up margins through the course of the year. And as those events unfold, we will continue to update you. But we have a very high visibility on what those synergies could potentially look like in the next 6 to 12 months. Now, coming to your next question on why did Springer Nature sell a business that's 250 crores in revenue for $8.4 million. So, I'd like to give some context and background. So Springer Nature had acquired AJE for a very strategic reason, which was to improve author experience. As we know, for the scholarly publishers, their customers are subscribers who pay to access content which is behind a paywall. Authors are the people that are actually creating the content behind the paywall. So there was a very strategic importance on having strong relationships with the author to improve the user experience for the customer. And that is why they had invested in acquiring a business like this. Over the years, as I think over the course of more than 5 years of ownership, they realized that AJE is a non-core asset, and their partnership with vendor partners like MPS has been improving, and that they could arrive at the same level of author experience by outsourcing it to a vendor partner rather than owning the author experience. So they got more comfortable about arriving at that same elevated author experience through partners like MPS. Once they made this determination, they decided to divest AJE, which they identified as a non-core asset. Very similar to what they did back in 2012 when we bought MPS from Macmillan, which is largely now part of Springer Nature. At that point, they approached us after several weeks, months of negotiation. We were very transparent because we've been working with them for 50 years, and basically told them that we would be comfortable acquiring the business where our payback period would be less than 3 years, and that because this is a new space, it's B2C, it's not exactly what we currently do, and therefore we would like to keep the the outlay to a modest level, to which they agreed, and we moved on from there. So I think for them, what's more important is that the author experience, so their NPS scores with authors continue to remain high. It's important for them that the employees that work for AJE continue to have a good home. With MPS, they have transacted before. We've taken MPS to a new level from where we acquired it from them back in 2012. So that gives them a lot of confidence that not only will the service delivery and the author experience be as high as it is required, but also the managers and the employees in the company will have a clear growth path under MPS. For an organization that's a multi-billion-dollar organization, a company of this size really is not as significant for them. For them, the strategic elements, when they calculate the benefits of the strategic elements, it's more important that those play out effectively. So quite similar to MPS. If you go back, we had acquired MPS in 2012. The revenues were 125, 130 crores, and we had paid about 50 crores for it. Similarly, the same event has taken place here, where we have acquired a non-core asset that has tremendous value to Springer Nature from a strategic element, and they want to make sure that the author experience does not get compromised, and therefore for them it was more important to sell to the right partner than to someone who's going to pay the highest price.
Okay. Excellent, sir. So when we see the numbers from the...
Mr. Naveen, may we request you return to the question queue for
just
any follow-up
a small follow-up.
Sir, there are several other participants who are waiting for your turn.
Okay, sir. I will come back in the queue.
Thank you.
Thank you.
The next question is from the line of Mahesh, who's an individual investor. Please go ahead.
Hi, Rahul. Rahul, this question was asked by a previous participant. So how would you describe the current AI NLP capabilities of AJE? And now that you have access to AJE AI team, how does it impact the MPS lab setup? How will you consolidate the two teams?
Thank you for your question. So I'll take the second one first. So, given the size of the company, AJE is like 250 employees. The AI team, of course, is around a dozen people. The MPS team obviously is much larger. So these two teams will be combined going forward. So it's not much of a overlap item. It's basically those team members will simply be added to the existing team. In terms of the product itself, basically, AJE uses AI in two ways. One is for internal efficiency and content efficacy, and the second is they license their product Curie as a SaaS platform. In both those instances, when we've compared and benchmark it to competition, there is very little competition in this with respect to this type of AI for the scholarly publishing market, the scientific publishing market. There's lots of tools and technologies that sit in general for content, but nothing in the market for this specific type of scientific content. So there's definitely a first mover advantage that this product has. And going forward, we will continue to invest and sustain the first mover advantage. Additionally, we see applications of this technology within our own workflows, so our internal development. So we will also be implementing this suite of AI solutions within our workflow environment. So it should also improve efficiency and margins in the MPS content business over a period of time.
Okay. Thanks. You mentioned the opportunity size of $112 billion for the AI NLP market. How would you describe the existing NLP market, either by domain or services?
Yeah, I think so that particular market, that comment that Pratna shared was coming from a research report. That's the total market. In terms of how we see our marketplace, we are seeing our customers basically looking to leverage AI to improve the speed to market, and being able to monetize their content, IP quicker. And as a result, there's a lot of pressure from our customers to reduce turnaround times, reduced number of touch points as content is being created. Remember, our customers are now subscription businesses. So what differentiates them in the marketplace is the volume of content, but also the quality of content. So a lot of the applications of AI is around speed and efficiency.
Last question.
Sorry, Mahesh sir, sorry to interrupt. May we request you return to the question queue for any follow-up questions?
Okay.
Thank you so much.
Okay. Thanks.
The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead. The line for Rahul Jain has been dropped, so we'll move on to the next participant. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Hello, am I audible?
Yes.
Yeah, hi Rahul. Congratulations on this acquisition. So Rahul, in the past, we've seen that acquisitions like Highwire or even Tata Interactive, et cetera, post the acquisition, there's been a runoff in terms of revenue, some customers sort of moving away, et cetera. So do you expect something similar happening in this case, or would like to hear your comments?
Thank you, Rohit. Excellent question. Good observation. Yes, I think historically we've seen that for a couple of reasons. One, there's been a high revenue concentration. So typically, if I look at Tata Interactive as well as Highwire, top 10 customers were upwards of 60% of revenue. And with change in ownership, uncertainty created issues. Second, as a run-up to the sale process, customer satisfaction was in both those cases that you described at an all-time low. And therefore, post-acquisition, what we saw was a runoff like you described. In this particular situation, I think the two things are quite different. So firstly, given that this is B2C revenue, there's very little customer concentration. In fact, it's a very highly diversified customer base. Second, from a customer satisfaction level, I haven't seen NPS scores like this in our industry. So they are constantly sustaining NPS scores upwards of 60, and so there seems to be very little customer dissatisfaction. So given there's low customer concentration, given that the incoming customer base is highly satisfied, as long as we continue the momentum, which is our plan, we do not expect the same runoff in this particular situation. Having said that, we do expect revenue in the first year, to be in the 200 and 250 crores range, because there were certain parts of the business that were unprofitable that we have not taken over. So we expect revenue to be sustained in that particular band range I described, 200 to 250 crores.
Got it. Very, very useful. One more question in terms of the other statement that you made, that the margins are somewhat lower right now, and you want to sort of take it to the company average. So if you can broadly talk a bit about what other levers, what other things that you sort of foresee, and how will the margins improve?
Thanks, Rohit. I'm sure that is something that that we will be able to share over a period of time. As you respect, we are currently in the process of improving the margins, and therefore, for comparative reasons, we can't detail out the specific steps that we're taking. Having said that, as those events unfold, we will share those updates with you. What I can provide is that the operating margin of the business is 65%. MPS was very similar, where when we had acquired MPS, the operating margin was 55% in fact. And very quickly, over a period of 6 to 12 months, we were able to lift the EBITDA and the PBT margins of MPS to a much higher level, about 25%. We see very similar trends here. A lot of the steps that we took at MPS will also apply here, but for comparative reasons, it'll be very difficult for me to get into those individual steps. But as we continue to unlock them every quarterly call, we will update you. But it's difficult to share because that information is sensitive.
Sure. No, I appreciate that. Thank you very much.
Thanks, Rohit.
Thank you. The next question is from the line of Ayush Bansal from Emkay Global. Please go ahead.
Yeah. Hi. Thank you for the opportunity. Most of my questions were answered, but just on the client concentration, could you just explain that what is the client concentration for the AG?
Sorry, could you repeat that?
Ayush sir, your sound is a bit muffled. May we request to use the speaker mode in case if you're using may we request
Hello?
to use the handset mode, please? Thank you.
Yeah. Is it better now?
Yes, sir.
Yeah. So most of my questions were answered with the previous one, but just wanted to understand that how is the customer base for AJE and what is the client concentration for the same? Hello?
Yeah, like I was explaining, the customer base is primarily B2C. And the average order values are fairly small. So just to give you some examples, the average order value for a customer that licenses Curie is $132. The average order value for someone who picks up a standard package of editing from AJE is $275, and similarly for premium it's $475. So it's really low. So it's a B2C customer base. So there is no customer concentration like we see in the MPS part of the business. It's a typical B2C business with millions of manuscripts getting edited and thousands of authors being supported.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Rahul Jain from Dolat Capital. Please go ahead.
For the opportunity, and sorry for disconnected earlier. Rahul, first of all, congratulations on this large transaction. I have a couple of questions to your comments which you have mentioned. One, you said that there is a potential revenue synergy that would come because you may cross-sell your Highwire platform to existing AG customers, if I got it right. So do you have this kind of a model because your AVs in this kind of a B2C business is so low, while you may be operating in a very different paradigm in your existing Highwire customer base?
Thanks, Rahul, for the question. Yes, I think and that's why I said I didn't say cross-sell throughout what MPS does. I specifically pointed to the platform suite. The platform suite already today is configured for authors. The difference is that we are selling the suite to publishers who then open up the platform to authors. So now we would go direct and open up the same technology. So for example, DigiEdit, which is our content authoring and editing platform, we could potentially open that up to the author community directly. So the Highwire suite of products, a decent portion of it is B2B2C, and therefore we feel we should be able to take it direct to B2C for the AJE customer base. Of course, those things will have to be configured and will happen over a period of time. I would say that from a revenue synergy standpoint, in terms of sequence, what is more likely is that AJE services will be sold to MPS's customers first, and then MPS's platform solutions would be sold to AJE's customers in terms of likelihood and speed.
Got it. Just one more question to your margin comment. I know this has been asked repeatedly, but if you could break up this synergy in 2-3 aspects. One is the aspect which you said that you would exit some of the less profitable or not profitable part of the business. That is one aspect. Second is any synergy that or operating leverage like thing that could come in. And third is the pure cost thing that you could do because of a very different way of operating or execution model that you might have versus the current way they are operating it. If you could break this up.
Yeah, Rahul, again, for competitive and sensitive reasons, it's very difficult to, describe what all levers we have. I can confirm that all that you mentioned is definitely part of, our strategy and some more. But again, very similar to what we've done with MPS and possibly what we've done with Highwire. So we're feeling confident, but again, information is sensitive. It's also very competitive. So would like to hold it to our chest till we unlock it.
Yeah, and just to clarify, what is the timeline that you have in your mind?
Sorry to interrupt. May we request you to return to the question queue for any follow-up questions, please?
Sure.
Thank you. The next question is from the line of Vikas Mistry from Moonshot Ventures. Please go ahead.
Rahul, I have a couple of questions. In one of your answers, you said that there's less of competition in this AI market, and what gives you such confidence of less competition, whether it comes from proprietary database or comes from multimodal contextual AI algorithms you have? And even if you say that there's less of competition, then you must be growing at a phenomenal rate. So do you feel that you will be growing at much higher rates, maybe 15 to 20% in this market?
Sure. Thank you. Excellent question. So my comment was that we have a first mover advantage. I definitely feel, competition will catch up. If whenever there's an attractive opportunity, you can never say that there will not be any competition. The advantage is definitely a first mover advantage. It comes from a proprietary LLM that AJE has created over the years. So competition, potentially will catch up. But yes, the from a growth trajectory, we are seeing, at least on the query side of the business, much higher growth. Overall, this sector, this B2C sector working with authors the growth rate tends to be much higher than, the B2B space. Historically, of course, MPS has never played in this part of the value chain before. But just to give you an example, I remember when I became CEO in 2015, 2016, our revenue was 225 crores. And during a period between then and last financial year, our revenue went from 225 to 500. In the same period of time, one of the players who's in an adjacent market, they were at 200 crores, Mumbai-based company. I won't name them, but they went from 200 crores to 850 crores. So we went from 225 to 500. They went from 200 to over 850. So clearly, this market, and again, they did that without. They don't have an equivalent of QE. So that's the absence of QE. So obviously, we've now entered a marketplace that has more tailwinds and a higher CAGR than the market that we've been operating in. It almost feels like resistance training where, we were operating in a very difficult market and doing extremely well. And now we enter this new market where the tailwinds and the rates have been lifted off. So hopefully, as long as we do a good job in execution, we should be able to achieve higher growth rates in this market compared to our incumbent B2B market.
Okay, that's great to hear. And follow-up, I want to ask a follow-up of that. One of your press releases have stated that AI natural language processing market is 200 billion. Please, it looks like a bit of a misnomer. So try to just put the number which is being only addressable by our company. So it gives a false impression of being higher total addressable markets. That is a bit of suggestion from my side. And I have a couple of sure.
Sure, thank you. We appreciate the recommendation. We quite humbly we got it from the information we got from the seller. But yes, you're right. You're absolutely right. We should be talking about TAM and not the total market. So we will take your suggestion. Thank you so much.
One data keeping question is that I want revenue per user of the company. What is the churn rate and what is the ad revenue out of this 200 crore, whatever you mentioned, out of the total revenue mentioned?
Again, for competitive reasons, I don't feel comfortable sharing that granularity of data points. What we can confirm is, total revenue is 200 to 250 crores, and we're serving over 80,000 authors. But beyond that, I would be very uncomfortable sharing data because, again, we've just taken over and want the company to do well.
I greatly appreciate, Rahul, your efforts, a phenomenal execution, a phenomenal acquisition. We hope that you will complete one or two more acquisitions going forward. Thanks to the whole team.
Thank you so much. That's the plan.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Opportunity, sir. Sir, I wanted to know two questions. Sir, why has the revenue been stagnant for AGE for the past 3 years? And the second question would be, sir, with all these allegations against deans of various institutions in the US, the need for checking on plagiarism as well as providing correct citation has increased. So I wanted to know how are we, is there a thought behind this to capture this opportunity as well as the revenue stagnancy part? Thank you.
So, sorry, could you repeat the second part of your question? I got your first part. Could you repeat the second part a bit louder, please?
Sure. Sir, I wanted to know, the activist movement like Bill Ackman, they have recently like made allegations against various deeds of these MRPs hires. So there has been a discussion regarding an AI plagiarism tool as well as an auto citation
Sorry
tool.
to interrupt. Mr. Rati, it is very difficult to
Yes.
understand what you're saying. So, in case
Am I audible right now?
it is, but you're sounding
Hello?
very much muffled. Are you using the speaker mode, sir?
Am I audible right
This
now?
is much better, sir. Yes, please. Can you please
Yeah.
repeat the question?
Sir, I wanted to understand that I wanted to understand regarding providing correct citations as well as an AI-driven plagiarism tool that's been in discussion with various US universities. So are we planning on making move in this kind of market, or I wanted to gain your understanding regarding how our current tools as well as AJE can help us grow in this market?
Thank you so much. I'll answer the second question first. Yes, absolutely. Research integrity is a growing area of investment from our customers. We have developed as MPS both a tool set as well as services to deliver on the research integrity requirements. Much of it is now being outsourced by our customer base. Similarly, AJE also has this capability. So the RQE service, the research quality service I was talking about at the top of the call, is exactly that. It's an investment towards improving research integrity. So yes, that's an exciting part of the market, and we're expecting significant growth there. In terms of revenue stagnating, I think a couple of reasons. One, of course, being attached to Springer Nature basically meant that they could only capture a certain portion of the market, and that market was basically authors that were in the Springer Nature universe, and it kind of tapped out their potential. So on the B2C side, there was a ceiling. Now that ceiling has been broken because we're now able to reach out to all authors, not just the Springer Nature universe. Similarly, on the B2B side, now that we are publisher neutral, publisher agnostic, we will be able to market these services to other competitors of Springer Nature and other publishers as well. So because of that, we are more optimistic about the future. But that was the answer on why the revenues have been stagnant. It's mostly been because Springer Nature acquired this business for a very strategic intent, which was to improve and elevate the author experience of authors engaging with Springer Nature specifically.
Okay. So just question. So the 5-year agreement that we have with Springer Nature, so what would be the current revenues that comes from Springer Nature as well as from China? You mentioned 20% of our revenue going forward.
Okay, thank you. So those revenues are similar to $5 million, and basically, Springer Nature is providing author services to authors from their platform, and those orders are redirected to AJE. So we have a 5-year term during which we have an exclusive partnership where we will be servicing those particular set of authors, and of course we also have royalties that we pay to Springer Nature once we get those orders.
Thank you.
Thank you.
Thank you. The next question is from the line of Karan Kapuria, who's an individual investor. Please go ahead.
Yeah. Hi, Rahul. Actually, I just want to understand about what type of geography are we looking to target by this B2C acquisition of AJE? Can you throw some light on it?
Yes, thank you for that question. So as of today, China is north of 65% of total revenue. And there are, of course, various other markets that they're present in, but the majority of AJE, the market is China. We expect markets, now that MPS, of course, being a public company in India, we expect markets like India, where the query tool is doing exceptionally well, to pick up, as we understand the India market really well. Directly for AJE, it's mostly markets where English is not the first language. Those are the primary markets. China being the biggest, greater than 65%.
So are we planning to target some other bigger geographies, maybe in the upcoming years, like India or US?
Yes, absolutely. So India is going to be our first course of action, given its home. The US, of course, English is the first language, so it's not the right market. But in the Americas, Central and South America would be excellent markets for us to pursue.
Okay. Well, my last question to you is, are you planning to do more acquisitions like similar to AJE this year, or these are planned for next year?
So yeah, like I had pointed out, we are pursuing 2 acquisitions this year. One we've already completed. Both acquisitions north of $20 million in revenue. So yes, we absolutely are looking at doing another one in the later part of the year.
Yes, sir. Can you? I missed the revenue part. What is the revenue size that you are targeting?
Minimum $20 million in revenue is what we're looking at.
Okay. Okay, thanks.
Thank you.
Thank you. The next question is from the line of Keshav Garg from Countercyclical PMS. Please go ahead.
Sir, I'm trying to understand, so that like you mentioned that we are expecting in FY25 between 200 to 250 crores revenue from the acquired entity. So if we take 225 crore, and sir, if we assume 30% operating margin that you are confident of achieving on the acquired business, so that gives us somewhere around 70 crore of additional EBITDA from this acquired entity, which is equivalent to what the amount we have paid to acquire it. And as you mentioned that the payback period you were expecting was 3 years, but here it seems that in 1 year itself we will be able to recoup whatever we have paid, at least in operating profit level. So is that understanding correct, or am I missing anything?
Yeah, I think, thanks, Keshav. Thanks for the question. No, I think, just to edit what you said, so the gross margin for this business is 65%. We are going to enter the new financial year in the early teens, in terms of EBITDA margin, and we will exit the financial year, in the late 20s, early 30s. So there's an entry point and an exit point. I think taking an average of 30% for the entire year, I wouldn't agree with that math. So it'll be somewhere in between. In terms of payback period, 3 years is where we definitely want to recoup all the monies that have been invested within that 3-year period. Historically, we've done better than that. So, for example, in the Highwire acquisition, our ROC in the first year itself was 86%. Will this one be similar? I'm not sure, but it'll definitely be higher than our existing ROC for the company, which is north of 30%.
And sir, lastly, sir, now so we had 3 business divisions. So now is there a 4th business division, this acquired entity, or sir, which content platform or e-learning, where will these numbers be added?
So these numbers will be attributed to content and platforms. When we report our first quarter for FY25, it will be clear what the distribution between those 2 segments is. At some point, depending on how this business performs, a better way to look at MPS might be B2B and B2C. But again, that's 2 years away. But for now, I think we will probably just look at our business the same way and distribute the revenue and the income across content and platforms.
Great, sir. So thank you very much and best of luck.
Thank you.
Thank you. The next question is from the line of Dipesh Lakhani from Dolat Capital. Please go ahead.
Yeah. So what is the amortization jump we might see on this acquisition?
All right. I'll hand that question over to our CFO. Thank you for the question. So this would be based on the fair market which we are going to work out for each asset and over the useful period of life, which is still under working. So we should be in a position to do the amortization once we have the complete clarity and workings on that. So next quarter, that'll be fine. Yes, it would be in the next quarter.
All right. So my second question is, what is the timeline for company's average profitability that you expect for AG?
Could you repeat that, please? What is that? Could you repeat that, please?
What is the timeline that we could expect the AJE's profitability to match with the company?
Yeah, we're aiming for 12 months. So we're hoping that the new financial year starts in the early teens, and ends up in the late 20s, early 30s is the goal. And of course, the goal is for not to stop there. We again, similar to our other businesses, content and platforms, this business also has tremendous operating leverage. So beyond that, as revenue grows, margins will continue to expand.
All right, thanks.
Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, you may press star and 1 on your touchtone phone now. The next question is from the line of Ankit Kanodia from SmartSync Investment Advisory Services. Please go ahead.
Thank you for taking my question. And I think you have covered really well about the acquisition in this call already. So my only question right now is related to the acquisitions which we mentioned in the previous quarterly call as well. So I just wanted to know your point on, as you said that you will be having one more acquisition this year. So how are we placed in terms of FY25? Do we have more acquisition planned? And what is the funding scenario looking like? Are we comfortable with internal accruals, or are we planning to raise debt or maybe equity fundraise?
Thank you for your question. Yes, I think the plan for acquisition remains the same. So the acquisition that I was thinking about, that I was talking about the last call, was this particular acquisition, AJE. The deal was at a fairly advanced stage. It took longer to close than we had thought. The next acquisition, of course, is we'll be planning it in FY25. In terms of funds, I think we think it's going to be a combination of internal accruals, but also if debt is needed, we're comfortable to raise debt to the tune of the forward financial year's PAT. So yeah, I think we're good on funding for the next acquisition.
And we maintain our guidance of more than 130 crores of PAT this accounting year, FY24.
Yeah, like I had shared in the last quarterly call, given the deferment of a large project on the e-learning side, we will probably miss our guidance of PAT for this financial year, FY24. But FY25, we are bullish about performance. It's too soon for us to talk about FY25 guidance, but at some point next year, rather next financial year, we will share that guidance. But at this point, we can only say that we are very optimistic about FY25.
Thank you. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Rahul Pansali from Prami Capital. Please go ahead.
Yes, hi. So our business has scaled up significantly over the last 2 to 3 years. And, we are in different geographies now, and we have B2B and B2C. And so it has scaled up a lot. So I just wanted to understand that, how do you plan to govern the business, and what is your role going to be, Rahul? Because it's a very different company from when you had joined. And plus, we are also planning to acquire a couple of more businesses. So I just wanted to understand how do you plan to govern the business now?
Thank you for the excellent question. Yes, I think we've obviously, this has not suddenly happened. We've been planning and working diligently towards this outcome. Overall, we've been investing in the next 3 layers of management. We have general management teams that we call the GMT, which is focused on a specific business area. We have another layer that we call the SMT, which is the senior management team. The senior management team spreads across multiple business areas and not specifically one business area. And finally, we have the leadership team, which is focused at a vertical level, and some of us are also focused across verticals. In terms of, my role, I'm of course, the chairman and CEO of the company. And over a period of time, as we have scaled, I'm doing less and less in terms of daily transactions and focusing more on, the growth of the business, the strategic thinking, as well as driving the business forward from a vision standpoint. So my role, of course, has significantly transformed in the last couple of years, and I've been able to do that because of an excellent team that is supporting me. Also, some of the acquisitions that we've done have come with founders, and some of the ones that we will do forward as well will also come with additional founders. Those founders are being placed right at the leadership team from day one, so that they can add tremendous value to the company as well as to the rest of the management team. Yes. So absolutely, the business scale is increasing, but we are not, we're also rapidly investing in management depth. We have created, through the hard route, a culture of ownership. We have rewarded that culture of ownership, through ESOPs. We today have 55 people that have ESOPs in the company. We have over 100 people who we call the torch bearers. So between the GMT, SMT, and LT, there's about 30-35 people. And beyond the 30-35 people, there's another 100 people that we call the torch bearers that are responsible for the day-to-day transactions. So yes, very, very astute observation. My specific role has transformed, but so has many others, and we continue to invest in management and scaling the business.
Got it. Thank you so much.
Thank you.
Thank you. Participants, if you wish to ask questions, you may press star and 1 on your touchtone phone. The next question is from the line of Mahesh, who's an individual investor. Please go ahead.
Hi again, Rahul. How long will you wait for the next acquisition? Is it dependent on or contingent on anything related to AGE acquisition itself?
Thank you for the question. No, nothing contingent on the AGE acquisition. I have a managing director in the US who is running the integration agenda. He was the CEO of one of our competitors he joined us recently in the US. So he's driving the integration agenda on AJE. My goal would be, 6-8 months we should do the next one. Of course, we are pursuing multiple opportunities. So timing also gets determined by, how fast the sellers move. But yes, nothing contingent on what AJE does.
Okay. Thank you. Also, in Jan, you had mentioned about a new launch related to AI. Was that Curie?
Yes, that was Curie.
Okay. Thank you, Rahul.
Thank you.
Okay.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Rahul Arora for closing comments.
Thank you so much. AJE is our 10th acquisition since Macmillan entrusted us with the reins at MPS. It's very serendipitous that life has come full circle, and the same company has sold us AJE, that sold us MPS. My team and I are committed to supporting AJE towards its complete potential, as we've done with MPS over the past decade. AJE was founded to democratize discovery and research by an Indian immigrant. At MPS, our deep purpose has always been to further access education and learning, and there could not be more alignment in purpose, mission, and values between MPS and AJE. A diligent and responsible team effort lies ahead to take an excellent strategy to a magical reality through a common culture. Thank you for your active participation in our announcement call on the recent acquisition. We appreciate all your thoughtful questions. Your unique outside-in perspective helps us to learn and improve. I want to take this opportunity to express my gratitude to all our stakeholders for their continued support and respect. Our journey together has indeed been remarkable, and we have a tremendous opportunity to supercharge scale from here. I look forward to your continued support, feedback, and partnership mindset. Thank you.
Thank you. On behalf of MPS Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.